Good afternoon, traders and investors. Will back here with another one, coming to with a Wednesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, it was a very big fight between the bulls and the bears for a majority of our trading session. We oscillated between positive and negative on the SPY and QQQ about 4 or 5 different times before slightly ending in the red, SPY down about 0.2% and the QQQ just under that at about 0.26%. Now, this was kind of unexpected, especially after the fact that we got a negative jobs report this morning, which indicated that there are less job openings in the United States in relation to about 1 month ago. It actually missed the estimate as well. And with such a poor number in terms of your jolts, we would have possibly expected some big time follow through by the bears today after yesterday's 2% on the SPY and 3% declines on the QQQs. But we just did not get it at all, guys. That volatility that was there yesterday kind of just vanished over the course of the day today. Very strange trading session to say the least, but I wouldn't rule that the volatility is out of the books just yet for the week because we do have that non-farm payrolls report coming in on the Friday session. So in today's in today's video, guys, we're going to go through a few things together. Number one, we're going to go over that JOLTS jobs report and see the impact that it had on the markets. And then later on in the video, when we get to our stock specific section, we will take a look at, once again, Google getting plagued by some antitrust lawsuits by the Department of Justice, this time in relation to its advertising business. Now, Google has been no stranger to these antitrust lawsuits, guys. They go through one of them every 1 or 2 years, but this year has been particularly bad for Google in that respect. This is now the second antitrust lawsuit brought on the company in just the last month worth of time. Now, these lawsuits were started back in 2023, but they're now being put to trial, and we know that the Department of Justice won the last one last month over the search monopoly business that Google is executing right now. And now it's a question of their advertising business. So we'll take a look at that later when we cover Google stock. Very, very interesting, however. So before we get into more of that, guys, let's go through our daily market rundown, shall we? So moving into the SPY down about 0.2% and the QQQ's down about 0.26% as a whole. Now take a look at the heat map though, guys, because it's all a question of rotation. I keep telling you guys, right? When you see the SPY and the QQQ down, we have to take a look at how the broader market is doing. Is there still some good market breadth? And is there still some decent rotation? The last thing you want to see on a red day, guys, is all of your major sectors dropping simultaneously. That is synonymous with money leaving the markets. But as a whole today, there was still some decent rotation across the board. Now, semiconductors coming a little bit back to life here, but NVIDIA unfortunately down once again. The rest of the index did perform quite adequately. In terms of your big tech names, most of all your big tech names were down today, except of course for Meta and Tesla putting in a 4% day out of nowhere pretty much off of no news. What did perform well, guys? Consumer defensives once again. Financials slightly down on the day. Healthcare having a decent day as a whole. But as we can see, guys, utilities, industrials, real estate, defensives have been your outperformers as of recently. And I do expect that to continue, guys. They usually respond best to rate cuts and also respond best in the light of a recession narrative. So I would not be surprised if this rotation out of some of your high-flying semiconductor names kind of rotates and trickles down into a lot of these sectors that have kind of been left behind over the last year and a half. Take a look at your one-day relative performance, guys. You can see that rotation even better. Utilities, defensives, and real estate and industrials up in the green, and everything else kind of trailing behind, led to the downside by energy. Energy has been having a rough time as the last 3-4 days just because of the prices of underlying oil. Oil's been coming steadily down because of certain OPEC headlines, and that is pretty much the gist of things. On the 1 week relative, where do we stand? Well, your outperformance continues in utilities, defensives, financials, real estate, and healthcare, the sectors that I've been telling you guys to pay the most attention to. And to the downside, of course, we do have technology, basic materials, energy, communication services, which is largely Google and Meta, and consumer cyclicals as well with a bit of industrials, right? So overall, very mixed market, but let's take a look at some of the breadth as well. I like bringing up these two things every time we do some breadth analysis. This is your percentage of stocks above the 50-day moving average. And as you can see, we're currently at about 53%. Definitely not in much of a fear-driven territory right now. In terms of a broad market sell-off, for those readings, you'd have to see somewhat like we had back here earlier in the month of August with the Black Monday sell-off, and then earlier in the month of April as well, with some fears over renewed inflation concerns. So still definitely a relatively broad market with 53% of the names above their 50-day. In terms of the number of names above their 200-day, guys, Well, you can see it's about 56%, usually in line with signs of a very decently broad market. Definitely not any levels of high fear concerns right now like we saw last fall in October, but we will see how this one advances so far. But we can definitely see that net rotation, guys, from growth and tech and more a risk on trade into value and defensive names. So we have to follow the money essentially, guys. If we're looking for swing trades with shares or call options or any upside as a whole, I'm not going to be favoring plays that have been down significantly over the last 2, 3, 4, 5 weeks, such as technology or semiconductors. I'm going to be going with the ones that are still maintaining very healthy weekly uptrends, guys. And for the most part, those are going to be these following sectors: XLU, waiting for a little bit of a pullback for further trend continuation. XLP, which is your defensives as well, looking for a tiny little bit of a pullback for further trend continuation. We can go into a few more. XLRE is your real estate index. Same thing, looking for potentially a tiny little pullback for some more upside. And that is pretty much the ones that I'm going to be looking at more closely. Couple that with healthcare as a last portion of that, looking for a little bit of a back test right here and possible further rally. So those are the ones, guys, that I'm going to be going for because they are favored right now, rather than trying to time the bottoms on something like an SMH or on some consumer discretionary names, right? Not really the time for those right now. I would rather go with the sectors where the money is flowing into, rather than trying to time some local bottoms of the sectors that the money is flowing out of, right? So before we get into more technicals, guys, let's go over those JOLTS jobs reports very quickly and see exactly what happened this morning. So as you can see, the JOLTS jobs openings right here came in at 7.673 million, which is far under here of the 8.1 expectancy, right? So if you guys want to know what the most recent job openings reports have been, I'm glad you asked. Thank you for wondering. So here's your historical numbers in terms of your jobs openings. As you can see, the labor market has been steadily cooling now for approximately the last 2 years. We are now coming back down to roughly pre-pandemic levels right now. So in terms of jobs openings, you can say that in terms of our historical norms right here, the market is still relatively healthy. Now, of course, it's not a booming jobs economy like we had back here, but still in terms of our historical averages, not that bad, which is why I do say, guys, even though the economy is slowing, even though the jobs market is slowing as well, we are not at levels that are historically large red flags, right? Are there small little cracks right now? Yes, but that is a byproduct of the Federal Reserve trying to dampen the effects of inflation by having interest rates really high right now. We were always expecting a slowdown in the economy, guys. You cannot keep rates at 5.5% for a year's worth of time and expect there to be no slowdown. What we're looking for here is whether or not the slowdown is way too overdone, or whether or not we still have a chance at a soft landing. And when we look at these numbers, such as GDP and our jobs numbers, it does show us that yes, even though we're slowing down, we're not coming to an absolute halt in the economy or an absolute halt in the jobs market. So that is the moral of the story right now. In these markets, we remain cautiously optimistic for that soft landing scenario, but we are also staying very conservative in terms of our positioning and playing the sectors that favor this style of market the most, right? It's the most we can do, guys. As I've said many times on the channel, we are not in the business of predicting a recession. We're in the business of reacting to data and positioning our trades accordingly. And of course, if we have a long-term portfolio, guys, none of this, absolutely none of this matters at all. We should just be dollar cost averaging into our favorite companies with every single paycheck, regardless of what the economy is doing, regardless of what economists are saying or analysts are predicting, right? So two completely different styles, whether long-term or trading, but there's something for everybody in these markets as a whole, right? So moving on from there, let's move into now our S&P 500 analysis and our technical analysis rundown on our major market indexes. Then we'll jump into big tech and then take a quick look into my portfolio for some of the new trades made today. So as we were saying, SPY down about 0.2%. Let's take a look at some of our trends here, guys. So as we were saying in the most recent days of trading, we unfortunately now have a daily downtrend, right? Failure to break out of the highs of this ranges into lower lows. Daily downtrend now pretty much underway. And what we were looking at, guys, early on this morning, I was telling you, watch for the back test of prior resistance into potential daily downtrend follow through. And the bulls pretty much came right into our area, guys. Barely missed it by 50 cents on the SPY, right? The analysis was good, however, we did get that initial rejection, and now coming in to put in some equal lows. Keep in mind, the SPY on the 1 hour is slightly oversold as well, so I wouldn't rule the bulls out just yet at maybe a second attempt at this zone, but the likely expectation, guys, especially considering the fact that we do have more jobs data on the horizon for tomorrow, the private employment change, also known as the ADP employment change, and then we have the non-farm payrolls, which is going to be the big one. This is the one that really unraveled the markets just one short month ago, right? So these two things will matter a lot in the next 2 coming days. So the expectation, if those come in negative, guys, I do expect these markets to potentially start moving a little bit lower, continue the daily downtrend into our big level of support down here, 546 down to about 538. That would be the expectation for our short-term support, possibly also looking for a potential weekly higher low and maybe even higher highs. But just keep in mind, guys, with September seasonality, this weekly uptrend, especially in the month of September, is going to be quite difficult to pull off. Take a look, September is notoriously bad for the markets. Everybody knows that currently. Taking consideration the last 4 years of September, right? 2023 down 5, 22 down 9%, 21 down 5, and 2020 down 4% as well. For the month of September so far, guys, we are currently still down approximately 2.25% on the S&P and over 3%, almost 3.5% on the NASDAQ. So we're pretty much halfway through these numbers as well. It's definitely going to be an uphill battle from here on out. And in terms of your expectation for the trading days, when does September usually get quite bad for the markets? Usually in the last half of the month. So potentially some relatively smooth sailing, but keep in mind at that midpoint in the month is where we get the rate cuts as well. So should be a very volatile time ahead. In terms of your fear and greed as well here, guys, pretty much sitting at neutral, right? We have a lot of conflicting factors right now. Market momentum is obviously quite weak. We've been coming down now for a few weeks in a row. But in terms of your relative breadth of the market, as I showed with the 2 indicators that we looked at earlier in the video, we are pretty much looking fairly decent right now. So no major red flags, but just be cautious of potential further follow through over the course of this week in the event those jobs reports are not all that good. Now moving on to QQQ not looking as good as the SPY right now. Daily downtrend is pretty much clear as day right now. If you want to do this in 2 moves, we can always do that like that. The traditional fashion is like this. It's actually 3 legs. But just for an overall technical view, right? Daily downtrend severely underway right now. Any bounce attempt, guys, will most likely just be for a lower high for potential revisit of these lows. That's if we don't break today's low right away over the course of the morning tomorrow, guys. Big level that we have to hold on to down here, 457 down to about 455. Lose those, guys, and unfortunately, the bears will start taking back way too much of this move. We know that we had a very good bounce by the bulls, about a 78.2% retracement right there. So it does give the bulls an opportunity to set up for those weekly higher lows for the possible weekly trend change. However, the opposite is also true. If the bears take back too much of this upswing right here, in or above 50%, which coincidentally is the bottom end of my range of support, here is your 50% fib level, right? If we take back too much, guys, then the bears get way too much momentum and they can set up either for the weekly downtrend flush or the 2-step flush process of the rolling over on the weekly. So the QQQ is definitely not looking too hot right now, but there will be some very gorgeous opportunities and some big tech names coming up very shortly in the event we do start moving lower and lower in these levels. So the QQQ netly more at risk than the SPY in my humble opinion. So that's just the fact of the matter. Moving on to XLF right now. So financials kind of just hovering at the top right here. No real red flags whatsoever. We actually hit one of our take profits on Visa today. So very happy the stock pulling up into our trade location. We are into this one down here. And now when it comes up into this big area of resistance right now, we take a little bit off the table and we leave a little bit more on the table for the all-time high potential level, but beautifully executed trade. So happy with the way Visa and MasterCard played out. Hopefully all you guys made some money as well. So on financials, guys, gorgeous daily uptrend right now, no red flags. Looking for a daily higher low, anything pretty much above 43.61, looking for that daily higher low for potentially continuation of the uptrend rally. On the weekly is looking absolutely gorgeous, no red flags whatsoever. So even if we lose the daily higher lows and go into a daily downtrend, just understand that looking for a weekly higher low for possible further trend continuation. One thing I would love to see, guys, is in the event XLF starts pulling back, XLV starts pulling back, and our consumer defensives as well start pulling back, well, we need some rotation into somewhere, guys. And where could that possibly be? It needs to be in the QQQ, guys. We need to offset the weight of 3 large sectors pulling back here. We need to get some gains in the QQQs, guys, or else the SPY is also going to start coming considerably further down if the QQQs cannot make up for those pullbacks in financials, healthcare, and defensive. So keep that in mind, guys. This market is all about rotation. Now, taking a look at healthcare right now. So healthcare, we can see that we are slightly overbought on the daily RSI. Healthcare, for some reason, did not get up here, but for some reason, TradingView shows that that is the wick of the candle. But as a matter of fact, guys, we really only got today as high as about 157.31. So I labeled the actual high of the day with this yellow line right there. As you can see, gorgeous daily uptrend right now, no red flags whatsoever. In the event, however, we start losing the levels, break this location right here, 155, and start setting up for the daily downtrend, well, that'll just be a weekly consolidation mode to find a weekly higher low. I'd be probably targeting the 152, 151 area where we have the 12 EMA. Other than that, the bulls are in absolute full control of this sector right now. So any downside could be decent for some potential upside continuation in the future. But as I said, if that does happen, guys, we need to see QQQ pick up the slack. So far, they have not been. They've just been chilling. Now, moving into SMH. SMH as well, guys. Today down another 0.24%, but it could have been a lot worse, of course. Keep in mind, we do have some big earnings coming up from AVGO on the Thursday session. So that could definitely move the needle in terms of your semiconductors, because AVGO is actually the second largest weight in that whole index. So pay special attention to their earnings on the Thursday session. Now, keeping that in mind, guys, daily downtrend is clear as day on this stock right now. And unfortunately, we are now below our big area of support, guys, 238 down about 225. Considerably below us now. So now this area becomes resistance. Would not be surprised if we're looking maybe for a lower high into continuation of the lower low. How do you know that the bulls are ready to reverse this, guys? We need to see somewhat of an engulfing move, right? Need to get a 60%, 70 or 80% retracement, give us a good bullish move, and set ourselves up for the daily trend change. As of now, the bull's still looking fairly weak. In terms of the weekly chart, well, lower high is set right now. So the best case scenario that we can possibly look for is potentially a tightening range on the SMH, guys. You would not want to see the bears take back more of this move. The more they take back, guys, the more likelihood is that we revisit this lower area right here, and maybe even possibly setting up for the legendary head and shoulders pattern, which could send us in to deeper and deeper monthly consolidation, guys. They've had a tremendous rally over the course of the past 2 years, but I think it might just be time for semiconductors, especially in light of company guidance from semis saying that the second or Q3 would be slightly slower and then picking up demand in Q4, and then all through 2025, they should be booming. This would actually be the perfect period in time for SMH to possibly consolidate over the next 2.5 months right here and let the rest of the market do some of the hard work, right? So not looking the best on SMH. I still will play a few names individually, but I'm playing them a lot less aggressive than before, guys. The money is just rotating out of SMH and going into everything else that's been left behind. Moving into IWM right now. So the Russell down about 0.17%. Daily downtrend clearly underway as well. So even if we do get a slight little rally here, guys, just expecting probably a lower high and possibly into a lower low scenario, right? Where are we looking to maybe find some support levels for the bulls? Where we're coming up into it very, very shortly, right? 210 down about 208. This big range, which was prior resistance, should be current support for the stock, or for the index rather. And in the event we lose those levels too, probably just going into a little bit of a range worth of consolidation, guys. I would be very, very surprised if IWM can actually manifest into a great bull run here in the face of a potential recession or recession narratives, guys. In my humble opinion, there's virtually almost no chance that that happens. So this one is a pass for me. Probably just going to tighten up here for a significant amount of time until we get through those recession headlines. I would only be interested in playing the IWM if I can get some crazy discounts on it, talking about the lower 190s. But up here, not the type of trade that I'm looking for. Moving into the Dow Jones now, lastly. So the Dow Jones not looking too bad, up about 0.09%, but we are kind of losing our daily uptrend momentum right now. As you can see, flush of the low, so the daily uptrend is unfortunately lost. And in the event we set up for a lower high into lower low, daily downtrend flush, well, we'll just be looking for a slight weekly higher low. to possibly reset up for another leg of weekly uptrend. The bulls in full control of this one. And you guys are seeing a common theme, right? In the more defensive sectors, the bulls have maintained the weekly uptrends, right? So you can see XLF never lost the weekly uptrend, XLV, XLP, which is consumer defensives, never lost it, and the Dow Jones as well, which is more of a, well, it's a price weighted index, number one, but usually it has a more defensive connotation to it, right? But the ones that have lost the weekly uptrends, QQQ, the S&P is trying to get it back, right? As it's a mix of everything, but QQQ, SMH right now, and IWM do not have clear weekly uptrends. So we should not be playing them ultra aggressively, guys. Stick with the sectors that are in favor. It takes a long time to reverse weekly trends. So you may as well stick with the ones that are proven winners as of right now. Now, moving down here, guys, taking a look lastly at the VIX. So you can see, guys, the VIX didn't really get much follow through over the course of the day today, even though we did get that worse than expected jobs report, right? Where I really want to be playing the VIX for some potential shorts would be if ever we get a pure fear spike in the $35 to $40 range. Then I'll be looking to short the VIX, but not really before then, guys. There's not enough meat on this trade, in my humble opinion, right? If we're trying to trade it from 23 all the way down to 16, I understand there's some gains to be made there, but not worth the risk to reward, in my humble opinion. I really need to see a lot higher. But we're going to be on the watch for this one, guys, because we do have a lot of news events coming in the foreseeable future, right? This week, next week, we also get CPI and a number of other things like that. And then we're pretty much into rate cuts on the 18th, which are literally going to be 2 Wednesdays from now. So we do still have some possibility for the VIX to kind of slowly grind and then maybe spike into there if we get one bad news report. That is what I'm looking for. So I'm going to be very patient with it as a whole. Now, moving on to Bitcoin. So Bitcoin as well, let's do crypto because we haven't done crypto so far this week. So Bitcoin really trying its best to hold on to the last line of defense right here, which is arguably the 57K down to roughly 55K, right? Start losing that and it's not going to look good for the bulls at all. Right now, we are trying to put in some form of reversal. Need to see a break above 59,750. If we can get that done, guys, daily uptrend capacity is probably in motion, and we're looking for a little bit of upside. As a whole, though, Bitcoin has just been really consolidating sideways, guys. No clear price action, no clear direction as well. And that's a byproduct of just the last 6 months of monthly consolidation. As a whole, I like the way Bitcoin is consolidating right now. It's kind of bull flagging at the top of the range, right? But we could possibly see in the event that the markets really start to unravel here with recession headlines, bad data, stuff like that. Just keep in mind, this is a risk on trade and it does stand to lose the most in the event that we get some headlines like that. So my next targets for buys, probably 50K and then all the way down here to about 44K in the event we come all the way down there. I don't know, once again, if we will. I'm just saying what I'm going to do if we do end up in these lower levels down there. I already have some long-term Bitcoin, so I'm not really looking for a swing trade on Bitcoin just yet, just because of so much data uncertainty over the next 2 weeks, right? Moving into Ethereum right now. Ethereum, same concept as well, right? Although Ethereum is now kind of losing this daily trend, again, daily downtrend for the bears. We are just looking for this area to act as our last line of defense. This is 2,600 all the way down to about 2,200. Would not like to see the bulls lose this area at all, guys, because then you would really be sacrificing way too much of this monthly upswing right here and may just plunge us into a tightening range for the foreseeable future until the economic headlines get a little bit better. So Ethereum, unfortunately, looking very weak in relation to Bitcoin. I will not be adding any more Ethereum to my positions at all. I'm more so gonna start playing Bitcoin a lot more aggressively, guys. You know, Ethereum, the popularity of Ethereum, unfortunately for us, contrary to my expectation when we were kind of even back here, I was thinking that Ethereum, if we went into a bull market, would be the popular destination for people looking to trade crypto, whether that be meme coins or whether that be utility projects. But unfortunately, it's just not materializing just yet. So moving on to our big tech names now. So big tech, Apple down another 0.86%. Apple really coming into our big area of support right now, 219 all the way down to roughly 214, right? So we were on the watch for this break of this tightening range right here. And unfortunately, Apple pulled off the scenario that we did not want to see, which was a break above, look above, and then flush below. Usually that does get followed through, guys, with probably a lower high into lower low for daily downtrend continuation. So we will see how well the support area holds up. In terms of the weekly, guys, as well, the weekly not looking too bad on Apple. We know we lost the weekly right here, but we also understand we had a very juicy bounce. So I wouldn't rule the bulls out just yet, right? We can set up for a weekly higher low for possible weekly trend continuation, but I would also not be surprised, guys, if the markets, continue their sideways and continue their timid movement. I would not be surprised if Apple does start revisiting some of the lower levels here, 210, 207, and maybe we just go into somewhat of a tightening range. I'm not really expecting the flush of the 200, but possibly just maybe an establishment of a tightening range as we lead into Apple's new iPhone products and Mac products that have AI capabilities. More news on those should be coming out this very month as a whole and also into the month of October. So looking forward to see what Apple has prepared for us. But as of now, guys, I'm not trading this one. I would need to see better pricing, closer around to $205 to about $200 to be looking at some short puts or any credit spread strategy whatsoever. Moving on to AMD right now. AMD up about 2.87%, but you really can't tell because it's inside yesterday's disastrous candle right there, right? So AMD still, unfortunately, guys, in pretty much a daily downtrend right now. We are still looking for just a lower high in relation to this guy right here, 149. And we also have all of the moving averages above us as resistance, right? The 12, the 26, and this green one, which is a big one, which is your 200-day moving average. So I would not be surprised if we do get possibly some lower highs and then revisit these lows. That is if we don't just flush them right away to the downside, right? So AMD, unfortunately, the bulls are not in control. We will need to see eventually an engulfing pattern move and a recapture of the daily uptrend if we want to be able to say that the weekly higher lows are set. As of now, the bulls are still trying to set up for those weekly higher lows, trying to get this weekly trend in motion, but the sector is just not cooperating, right? Taking a look at the size of the move, guys, it was a very nice move to the upside, 618, right? So we do still have a chance at setting up these weekly higher lows, but I'm not holding my breath for them here, guys. What I'd rather do on AMD is in the event we get continued downside follow through, I'm looking to write short puts, guys, essentially under 10% under wherever we are. So if we're at the 140 mark right now, I'd be looking for short puts possibly in the high 120s, 128, 125, looking to just trail the stock as it potentially moves lower. Very, very tough to time the bottom on this thing, just because most of its earnings and revenue increases will be coming in 2025 in terms of the data center ramp. So if semiconductors continue being weak, I would not be surprised if, unfortunately, AMD gets dragged down to these levels again and starts retesting the 120s. I like it though. The valuation down there in the mid 120s is extremely attractive. Even in the 140s right now, it's extremely attractive. So the lower we go, the cheaper this valuation gets, and the more tempted I am to add more and more size into this position as a whole. Moving on to Amazon right now. Amazon also a little bit weak here today, 1.66% to the downside. So what we have going on Amazon right here was daily trend change attempt by the bulls. And now, unfortunately, the bears are saying no. So keep special attention on this level right here, 169. Lose 169, guys. Unfortunately, you do have a daily downtrend underway. And then we're going to be looking, can the bulls set up for a weekly higher low for a possible weekly trend change out of the month of September, right? So if you get some negative September seasonality here and pull back into here, the expectation is the bulls might be going for a weekly higher low for a possible weekly trend change when we get more favorable seasonality. All in all, though, no fundamentals have changed in Amazon's business. They are firing on all cylinders, and it should be one of their most profitable years ever, guys. And that is saying a big thing. Amazon is now focusing on the shareholder, focusing on efficiency, something that they've never done in the past. They've always been about top line revenue growth. Now they're focusing on net margins, free cash flow expansion. That is exactly what we want to see as shareholders. And it's going to be very tough for the bears to get through this huge area, guys. Previous all-time highs from 2020 and 2021, going to be a big challenge for them to get through. So one thing's for sure, the lower we come here, I'm already looking for some short puts on Amazon in the high 160s, think 167, even the midpoint 165. As low as we can get here, guys, while still getting our 0.5% rule for those short puts. I'm a big fan of Amazon. And in the event we start retesting these lower 160s, guys, that's when I start thinking about call debit spreads and maybe even some leap call options. Now, moving on to Google. Google down another 0.5%, guys, and unfortunately, it's because of this. So let's go through the article really quick and recap what exactly is happening for Google again. U.S. antitrust trials targets Google's digital ad business. So let's get into it. The advertising tools in question contributed to more than 75% of Google's $307 billion in revenue last year that came from advertising. Google is far and away the largest seller of advertising on earth. They touch every part of the industry, if not directly, then indirectly. Everyone has an interest in Google one way or another, said an advertising consultant and financial analyst. So the antitrust regulators accuse Google of dominating the markets for the technology behind website ads by tying its tools for publishers publishers and advertisers together, staking out a privileged position as the middleman. If you don't know what that means, guys, well, let's take a look at the Department of Justice's own website for this lawsuit, and you'll see they have a nice little graph for us. So here's what they mean by acting as the middleman. Google actually is more than the middleman. I would say they are the three-quarters man. They pretty much have everything. When you come in from sell side, from website publishers, or from advertisers as a whole on the buy side demand, look at all the paywalls that Google has you run through, right? So you have 90% of the market share for publisher ad servers. Then they run that through their ad exchange, which they also have 50% market share for. This is what accepts all the bids from both sides. And on the buy side demand, if you're an advertiser, right, they have Google Ads, which has 80% of the market share. And down here, we have the demand side platforms with something like Display and Video 360 with about 40% of market share. So you can see, guys, not only is Google the middleman, they control the market makers for both sides of the equation, and they control the middleman with the ad exchange too. So very dominant position for Google as a whole, guys, and it's going to be extremely tough for the Department of Justice to break up this company, which are some of the things that they may want to do. Let's move on. Google has denied the claims, saying it is not required to share technological advantages with rivals and that its products are interoperable with those offered by competitors. The Justice Department alleges that Google controls 91% of the market for ad servers, where publishers offer ad space, more than 85% of the market for ad networks, which advertisers use to place ads, and over half of the market for ad exchanges. Very large dominance, guys. This is Google's moat, right? It's why I invest in the company. It's going to be excessively difficult for the Department of Justice to do anything about this, guys, because at the end of the day, who has the choice whether or not they want to run ads through Google? It's not Google. It's not the Department of Justice. It's your everyday user, whether you're an individual person, small business, large corporation. Everybody wants to run ads on Google because they are the biggest and they have the most traffic. Now, whether or not the Department of Justice implements competition laws that Google must obey by giving its competitors a chance, right? Opening up its advertising network a little bit, that still doesn't change people's personal choices, right? If people want to go with Google, they will go for Google. Whether you make that easier for people to do or harder for people to do, people are going to advertise on the largest ad network in the world. That's why I do not believe that even if the Department of Justice wins this lawsuit too, what is going to be the recourse? We know they won the search monopoly lawsuit, but we still don't have any concrete steps the Department of Justice is looking to take for any recourse. Same thing with the advertising business. They may win the lawsuit and rule Google to have monopolistic practices for advertising, but what are they going to do about it, right? Are people automatically going to shift their advertising preferences from Google to something like a Bing or something like a Yahoo or something like a Yelp just because of this lawsuit? Probably not at all, right, guys? If anything, maybe Google loses a fractional portion of its business, but I don't think this is going to change anything for the company, right? Google says its share of those markets, which the Department of Justice alleges is over 85 to 90%, is 30% or less when including advertising on social media, streaming TV and apps, and says the Justice Department's narrow focus on website ads obscures the fierce competition it faces as those categories grow. Social media dominated right now, of course, by Meta, and then streaming TV and apps, of course, dominated right now by applications such as Netflix and also the Trade Desk. Amazon too, and Apple as well do streaming advertising as well, right? So that is the moral of the story behind this lawsuit, guys. As a whole, I'm still a very proud Google investor. I do not think that this lawsuit, regardless of the outcome, is going to change preferences for the actual advertisers and individuals themselves, guys. They will most likely continue to use Google, whether or not they make it harder for people to do so, incrementally harder, right? They allow more competition. It doesn't mean just because there's more competition that people are going to use the competition, guys. In this case, it's winner takes most. And what platform in the world has the most views for not only search, but advertising? It is Google, right? So this is a tremendous buying opportunity in my humble opinion, guys. Google down here, you know what this reminds me of? Very curiously, this reminds me of Apple when we were down here pretty much in the 170s and Apple could not get away from negative press, right? You guys remember this, right? $2 billion European Union lawsuit, the Department of Justice lawsuit, the China slowdown, the Vision Pro, lack of phone innovation, Warren Buffett selling, AI is underwhelming. A lot of these things you can talk about Google as well, right? They have European Union lawsuits as well. They have 2 Department of Justice lawsuits. They do not have flat revenue growth. They do not really have a China slowdown or competition either. They don't really have a too expensive product, but the AI is underwhelming. That they definitely do have. Same thing for Apple, right? Apple got beaten down and everybody was saying that's it for the company as a whole. We tagged the 170s and pretty much the rest is entirely history, right? So this reminds me eerily of the situation that Apple is going through right now, or that was going through, is now happening to Google. And usually these do result, guys, in tremendous buying opportunities for these companies. So that is my position on the matter. Now, moving into Google's price action, guys, we can see there is a clear daily downtrend right here. So at this point, any move to the upside, probably looking for a daily lower high into possibly lower low. Of course, we will monitor the size of the bounce, right? An engulfing bounce gives us a better chance of reversing this daily uptrend. But until we see that engulfing bounce, the expectation is for possibly lower lows and possible continuation of this weekly downtrend as well. Keep an eye, guys. The size of this bounce by the bulls was very weak. Size of the bounce by these bulls right here was very weak, only 38.2%, the weakest bounce out of all of big tech. So I would not be surprised if maybe we start retesting these lower bounds right here, 150 down to about 140. That is going to be my buy the dip heavy on Google. I have been buying the dip. I have a number of Google positions in these locations right now. But if we come down here, guys, it's going to be too good to pass up. That will be Google 26% off the all-time highs, coming into very large support here, guys. Beautiful monthly uptrend right now on Google, looking for the monthly higher lows, right? What else? What other chart was looking like this? Break out of the all-time highs, retest of possible previous all-time highs, and some lawsuit headlines, guys. Well, we just literally traded some of these earlier, right? Do you not notice the similar patterns on Visa, retesting the all-time highs? They had also Department of Justice lawsuits, one that's been going on since 2005. MasterCard as well, same concept. So just remember, Apple, Visa, and MasterCard have gone through the exact same headlines as of recently, and we know how those charts ended up. So I love this stock as a whole, guys. I will be looking to buy the dip very heavily down if we do get down there. Now, moving into Meta, give me a very brief second. And let's do some Facebook. So Facebook, Meta, up about 0.19%, not too bad of a day for them, but still in the context of this daily downtrend, clear as day right now. So I'll remind you, still probably looking for some lower lows. We would need an engulfing move and reset of the daily uptrend to be sure that our weekly higher lows are set. As of now, still in a notable daily downtrend. The expectation may be for a lower high into our big area of resistance. Again, this is 532 down about 516. In the event we continue lower, what are the bulls looking to do, guys? Looking for a potential cup and handle formation, right? They need to keep this tight. However, guys, we're running into the 12 EMA right now on the weekly, so we need to pretty much stop the bleeding right now for the bulls to give them a chance at that cup and handle and beautiful weekly uptrend recapture by the bulls formation, right? In the event it doesn't happen and Meta gets dragged down with the rest of the market because of bad data, I'll be looking to play Meta in this lower support range down here, 482 all the way down to about 456. Gorgeous location for Meta right now. Take a look at the valuation on Meta as well. Meta trading at a 1.23 peg, extremely cheap, very good free cash flow yield. It's a competition between Meta and Google, guys, but Google is actually winning. Google is the cheapest company in all of big tech right now in relation to its forward PE and in relation to its PEG ratio. Meta is a very close second as a whole here, guys. But those two companies, fantastic potential future upside. So that's the setups that I'm going to be looking for on Meta. Moving into Microsoft right now, another fantastic company at a nice little discount. So I am a big fan of adding some Microsoft in these levels and all throughout the dip if we continue dipping as well. So keep in mind, in terms of the daily here, guys, we are now still in a daily downtrend for Microsoft. So the expectation is probably just a lower high into maybe lower low. We're coming very close to our big area of support right now, which is where I love trading this company as a whole here, guys, right? So daily downtrend, we know that's underway, and we know that we need a big engulfing move to potentially shape up the trend change and set the weekly higher lows. What are the bulls looking to do? Looking to set up for the weekly higher lows for possible weekly trend change into late September or early October as well. So keep that in mind. This location, guys, 402 down about 391, last line of defense for your bulls. This has been a big support level all year, all the way since the early portion of January here, guys. I'm a big fan of playing this location in terms of put credit spreads in this lower location down here, even some call debit spreads, or even adding some shares as well. And in the event the markets really unravel and Microsoft somehow starts revisiting lower, talking about this location right here, right? 380 all the way to the start of this big support box, 360. That would be a tremendous discount on Microsoft, guys. That would be roughly 20 to 22, 23% off the all-time highs. It is always a very good proposition to be buying one of the best companies in the entire world when they're down 20% off the all-time highs. As of now, for me, it is still a nibble at about 13%, looking very healthy. Moving on to Netflix right now. Netflix up about 0.65%. Nothing bad to say about the company as a whole, other than the fact that they kind of lost the daily uptrend, right? So we did lose the daily uptrend, possibly just looking for a lower high into lower low momentum if the markets continue selling off. If not, you guys know the drill, looking for the engulfing move and the recapture of the daily uptrend. But let's say for all intents and purposes, we do kind of trend lower. The MACD on a lot of these charts, guys, is kind of rolling over, right? MACD on Amazon, not looking the best. The MACD on Google, definitely rolling over. The MACD on Meta has already rolled over, which translated into further declines. The MACD on Microsoft as well, looking like it wants to roll over too. Netflix is pretty much just the same right now on the daily. Now, moving into Netflix, where could we move into, guys, in the event we get daily downtrend? Well, just looking for a weekly higher low, right? Looking for a weekly higher low. This location here, 650 all the way down to roughly 630, seems to be a very decent area of support that we've kind of held from the highs of resistance in March. It's been consolidation, bit of consolidation here. So this is probably the next level that I'll be paying special attention to for Netflix. But as of now, guys, no real major red flags, just some very healthy pullbacks in my opinion. Moving on to NVIDIA next. So NVIDIA tried to manifest somewhat of a rally over the course of the day today. And as you can see from the lows of the market open, we actually put in a very good push, guys, almost a 5% push. However, we still ended red on the day, down about 1.66%. Just could not keep it up, guys. Just goes to show you guys, even the industry leader, NVIDIA, for semiconductors, guys, cannot keep the gains up. So if they can't keep the gains up, what do you think the rest of the sector is going to do? They are probably going to be following NVIDIA as well, right? I think that we're into some longer form consolidation for semiconductors right now. I do not think there's an immediate urgency to be buying these names for some potential crazy further rallies to the all-time highs, guys. Now we have a few concerns on the table. The growth for a lot of these names is slowing into the second half of the year. 2025 should be good for them, right? But this is a very good time for these names to take some off the table, consolidate a little bit, right, into maybe some sideways action. Take a look right here. Daily downtrend clear as day right now. Even this bounce, guys, could not get it done as a whole. So eventually we will be waiting for a decent sized bounce to possibly reset the daily uptrend. As of now, though, the bear's in full control and also in full control of this weekly too. So the best case scenario for the bulls right now is if we put a stop to the bleeding down here. 105 down to about $93 is going to be that level to watch. The best case scenario is coming into a tightening range, kind of like we had back here all throughout last fall, right? In the end of last summer. And then we were greeted with a very nice rally early on this year. May just be one of the patterns that NVIDIA follows for the remainder of the year. Even their great earnings, guys, was not enough to take them back up close to the all-time highs. So it may just be some range-bound trading for NVIDIA. Keep a special close attention to how it reacts from this zone right here, because if we flush this location there, guys, weekly downtrend simply continues, and then we might be in a little bit of trouble, guys, because then we have to go all the way down to 75 to find the next area of support, looking for that monthly higher low for possible trend continuation, maybe only in 2025, but you can see the monthlies not looking the best right now, really starting to curl down, and the MACD kind of peaking out as well. Moving on to Tesla. So Tesla putting in a 4.18% day out of literally nowhere, pretty much. They had some news yesterday as they were focusing a lot of their production in China right now. And it makes perfect sense, right? Chinese economy is really, really low right now. The wages are also low and they have a lot of output capacity over there, right? So makes sense that they're shifting production to their Shanghai plant where they can save some money. As a whole though, guys, still on the watch, right? Daily downtrend. We have a nice engulfing move right now. 100% of the move is now recaptured. In the event we start breaking higher on Tesla tomorrow, keep a closer watch on this 228. If we break over 228, guys, it would be a new weekly uptrend in motion against all odds pretty much. I'm extremely surprised at Tesla's price action right now. In my humble opinion, they have absolutely no reason to be rallying, especially when you have names like the likes of Microsoft and Google and Amazon, which are currently down, right? Why is Tesla up 4.18% in the face of consumer discretionary spending coming down, big ticket purchases coming down? Well, maybe just because we're looking forward to their Q3 deliveries and that robo-taxi event as well, right? So you might get a little bit of momentum in this stock. Keep a close watch on this level right here. And the event we cannot break out, guys, and start giving back these gains, pay special attention to 202.79. If we crack that to the downside, guys, well, weekly downtrend is pretty much now underway. And we'll be targeting these lower levels, guys, 200, 195 as a first stop. And then, of course, if we really fracture these 180s, we're all the way back 170 to about 178 down to about 160. This is really where I want to play Tesla, guys. I do not want to play it up here. If I'm going to play Tesla in these markets, especially knowing all the headwinds that we may have for the next 3 to 6 months, I need to be getting a very, very, very good price for it, right? Now, moving into Tesla. So Tesla moving on to Palantir. Palantir recovering nicely here today. They're actually down at a certain point over about 2.5%. Take a look at this. Actually closer to 3.5% and recovering nicely into positive territory. But the damage was done, guys. Daily downtrend with the lower low flush. So we'll be keeping an eye, guys, on potentially the setups for a lower high into lower low and maybe bringing us further into this big zone of support below us, 29 down to about 28 bucks, right? Decent level of previous resistance from 2020 and 2021 and should be looking to support these markets in the near term future as well. You can see we've now tried to come down a couple times into this general zone, the general area, right? But so far, not pulling back too deep into it. The bulls are in full control right now, looking for the weekly higher lows for possible weekly trend continuation. How do you know the weekly higher lows are set, guys? Well, I'm glad you asked. We get the daily uptrend reversal. When you get the confirmed daily uptrend, you know your daily higher lows are set. And at that point, we're probably going to put in another leg of trading. And where could we maybe be targeting at that point? $35 is going to be the next target for Palantir. All in all, looking very good, but I need a little bit better pricing here, guys. If we can come down 29, 28, I'm going to be looking to maybe write some short puts in the $27, $26 range as close as possible to this previous area of support, right? So all in all, the market's not looking too bad over the course of the day today, but keep a close watch on those jobs report. And the volatility is not done. So the way we play these markets, guys, still cautiously optimistic, right? We acknowledge the fact that there's cracks right now, there's certain red flags, but we also acknowledge the fact that we don't have any devastating data just yet. And the Federal Reserve still has all of its tools, guys, right? It still has the rate cuts, of course, and then it also still has the money printer. And I do not believe, even if they were to do some quantitative easing, aka turn on the money printer, I do not believe that to backstop the economy right now with the money printer, I don't think they're going to be causing any resurgence in long-term inflation if they do that, guys. Obviously, they have to be careful. It's a very large thesis, of course, guys, but I just don't see any long-term risks of inflation really coming back at this point because consumer spending patterns now, those patterns have been instilled in people's minds for 6 to 9 months at this point, guys, and they're not just going to change it like this because if the Fed turns the money printer back on, they're not going to be giving people stimulus checks like they did in 2020. No, they'll just be backstopping the bond market and the equities market, right? What does that mean for the average person? They'll probably never even see it, right? So they won't be injecting money directly in the economy. They'll be backstopping asset prices. So that's why I say that. Now, in terms of our portfolio, as you can see, right? Oh, well, unfortunately, guys, the portfolio just logged me out. So to avoid possibly having to edit the video and add another half an hour to this, to the video right now, let me see if I can actually log in for you guys real quick on my phone, because that'll really save some time for the editing of the video. That way I don't have to show you guys my login details and my username and password and stuff like that. So let's see if I can log in real quick. If not, I'll cut the video right here and you guys probably won't even hear anything that I'm talking about right now. So give me 2 quick seconds because I really want to get this done. All right, let's bring it in here. Do we have it? Yes, I think we... Oh, it's going to do this little refresh glitch on me right here. So I'll try to pull it up here, guys. But essentially, we closed a couple positions today. Some of them were very, very good in terms of our gains that we had on them. So let's pull it up. Yeah, we do have it right now. So perfect. It's cooperating finally. So in terms of our positions here, guys, right? everything is pretty much the same in terms of the ones that we changed, right? So we took one contract of CP off the table. We were in for 75 cents and we sold one today for $1.20, over 50% gains, guys, in about 2.5 weeks of trading. This was one of the defensive plays that I liked. John Deere is also coming alive right now. Our bull call debit spread is also alive again. We've been in this one for over a month. A lot of time left on this by December, but I like the way this one is looking as well. Another trade that we kind of wound down is a little bit more than half of the Visa position right here. You can see we entered right below 260. We closed about 5 shares around 281.5. Very, very small swing trade in this trading account, guys. Keep in mind, I have the long-term portfolio. I have a much larger trading account, but this is the one that we keep public just to show you guys all the different strategies and stuff like that that we're running. So we wound down a bit of that trade as well. And I think that is pretty much it for the ones that we closed today. Another trade that you don't see here anymore, you might remember the TSM short put play that we had over the course of the day. So that one was actually closed over the course of the morning right there. Let me just see if I can pull it up real quick. So in terms of the ones that we closed, so I'll show you guys from the Discord itself. We closed this TSM right here. We got it for 75 cents earlier yesterday. Close it today for 30 cents, 60% profit in one day. So usually I always want to reallocate the capital to something else when I can make 50, 60% of the premium in one single day like that. So in terms of what we did with that premium is we wrote some, let me just go down to it. So we wrote some Charles Schwab. We wrote the Charles Schwab 62s. This was part of the top 5 options plays that we were giving over the course of this week. Well, it was one of our bonus plays. We were looking at it 2 weeks ago as well. I like the $62 puts. We got them for about 19 cents minus the commission right here. Looking not too bad on Schwab. We also have we still have the SoFis that we wrote yesterday. Still have the squares. What we did today, majoritively, is open up some hedge plays, guys. So I was talking about this in yesterday's video too. So now you can see the hedges that we opened with our Discord members today. So we opened the SQQQ December 20th, $8 call. So these are slightly in the money. I left a lot of time on them and I went in the money with them just to avoid any significant time premium decay or extrinsic option value decay on those contracts, right? So we're really giving ourselves a lot of time on these things. In the event that the markets continue to drop, at least we have somewhat of a net hedge. I'm willing to go up to roughly 10 contracts on these, maybe a little bit more, but I'll need to see a more pronounced rally in the Qs. So far, we haven't really had that. So this morning before the jobs report is when we open these contracts. They're roughly trading at par right now. We also opened some TLT January 17th, $94 calls. At the time we bought these this morning, TLT was roughly around 98. We actually opened them at a very good location over the course of the morning here, guys. Let me just show you this TLT trade real quick. So we opened it prior to the jobs data coming out, and we actually timed this one perfectly. We were pretty much right about here, right before the jobs report, expecting possibly some upside in the event the jobs report came in negative, which it did, and we were greeted with some very nice gains throughout the rest of the day. So I'll be maintaining these pretty much all throughout the month of September at this point, and possibly through October as well. It's just a hedge, guys, right? In the money for about $6.50, and now we are considerably higher. Well, not considerably, but we are up on those contracts. So these are really just hedge plays as a whole here, guys. But you can see the rest of my exposure is net bullish at this point. So I will keep this net bullish exposure with a little bit of hedges and just focus on top quality companies. For any long directional plays, I'm still going to be using most likely names within utilities, consumer defensives, healthcare, stuff like that, right? Real estate plays as well. Those are going to perform quite nicely. And in terms of the wheel trade strategies, I will still be doing some tech here and there. Going to really favor more defensive plays right now. But if I am playing technology plays, I'll probably keep it to the very, very, very high quality plays, or the ones that I have the highest conviction in, that I do not mind being assigned the stock at that single strike price. You'll see a lot of Amazon, a lot of Google moving forward as well, because I really like those levels on the stocks currently. So that's pretty much everything for our portfolio view as well. Hopefully you guys enjoyed that, and hopefully you guys enjoyed the video. Keep in mind, in the event that you want to have my trades in real time, chat with me all day pretty much in the Discord, and have access to our private live streams that we do for about an hour and a half every single morning, for some pre-market prep and then live trading, you can always click the Discord link down below in the description and join us in our community. We've been having a lot of fun in there so far, so hopefully perhaps to see you in there. If not, guys, always feel free to like the video. Would really appreciate it for the growth of the channel, and always consider subscribing to the video as subscribing to the channel as well. Would love to see you back. We do these videos every Monday through Friday after the close. And lastly, if you have any questions at all, guys, or you want me to look at a stock specifically, some technical analysis, an options play that you want a second opinion on, not financial advice, of course, always feel free to leave me a question down below in the comments. And you guys know me, usually I always answer you within the first 24 hours. So that's everything I had for you guys today. All right, have a very good day of trading tomorrow, and I'll see you after the close. Take care and peace.